McCarthy Construction was a family-owned firm for 138 years until Mike McCarthy sold his majority interest to the company's 2,000 employees via a well-funded employee stock ownership plan. As a 100% employee-owned company, McCarthy brings in more than $1 billion in annual revenues and is ranked among the nation's top 20 builders. McCarthy is one of more than 11,000 employee stock ownership plans, or ESOPs, in place in the United States, covering 8 million employees, or 8% of the private sector workforce. An ESOP gives employees a stake in the firm by making them owners of stock in the company. Employees do not actually buy shares in an ESOP. Instead, the company contributes its own shares to the plan, contributes cash to buy its own stock, or has the plan borrow money to buy stock. ESOPs are governed by many of the same laws as 401k and profit-sharing plans, but there are two big differences. ESOPs are required to invest primarily in the stock of the sponsoring employer. Second, an ESOP is unique among employee benefit plans in its ability to borrow money. This makes the ESOP a useful business finance tool.
So that through the use of an ESOP, a loan can be repaid, both principal and interest of a loan can be repaid on a tax-deductible fashion by the employer making contributions, tax-deductible contributions to the ESOP, so that an ESOP can borrow money from a bank, then use that money to purchase the stock of the employer company. So the employer company then has money, cash, which it can use for a variety of corporate purposes.
The repayment of a loan can be made through the ESOP by the company making annual contributions to the ESOP. The annual contribution is entirely tax-deductible, both as to principal and interest. The two most common uses of ESOPs are as an extra employee incentive plan and or to buy the stock of the retiring owner. There are many tax provisions to encourage retiring owners to sell to an ESOP. There are additional tax advantages for an ESOP rollover if the ESOP owns at least 30% of the company's stock after the sale and the seller reinvests the proceeds in stocks and bonds of domestic corporations.
So it allows the business owner to sell the stock to the ESOP, get fair market value for his or her shares, not recognize any gain for income tax purposes, get a portfolio of marketable securities that provide, can be dividend-paying stock, and defer the gain, the tax on the gain, until the business owner subsequently disposes of that stock.
If the business owner doesn't have to sell the qualified replacement securities and can keep them until death, a stepped-up basis for those securities is provided, so no gain is taxed. This gives the business owner the opportunity to pass the portfolio of qualified securities to heirs with no income tax penalties. In addition to substantial tax advantages, selling to the ESOP preserves a business's independent identity. A sale to an ESOP allows the seller to sell all or just part interest in the company and do this gradually or all at once. An ESOP sale is a benefit to valued employees and can assure the continuation of jobs. Employee ownership is a popular trend in American business. Thousands of companies give most or all of their employees stock options. Most of the companies sponsoring these plans have at least 20 employees, or they are startup companies that plan to grow quickly and be sold or go public. ESOPs can be expensive to install and cost several $1,000s annually to maintain due to complex regulations. An ESOP company must have an annual independent business valuation, which accounts for much of these costs.
So there are some ongoing costs, and administratively there are some ongoing costs. So the company needs to recognize that there will be some costs associated with it, but the tax benefits are so great that many firms find it worthwhile to invest in an ESOP.
Those benefits extend beyond taxes to include improving employees' attitudes toward their companies, and these improved attitudes can translate into a better bottom line. Your tax professional will be able to help you determine if an ESOP is an option for your firm. I'm Danita Blackwood, reporting for SBTV, the premier source for small business news and information.